everyone. Today I wanted to talk about the latest announcement that we just had from Jerome Powell, the Federal Reserve Chair, in regards to the interest rates, which he has announced the start of a quantitative easing policy taking place ahead of the presidential election in another 3 months. And how is that going to impact the economy in general and the real estate market in particular? We know that in the last 2 years, since March of 2022, we have seen a total of 11 increases on the interest rates, which has resulted in a decrease in demand for housing, even though the real estate market, the prices of homes across the board in the United States are still at the highest level they've ever been. We're starting to see a slight decline on home values in certain areas, which for the amount of appreciation they have had in a short period of time is not really that significant. And on the overall picture, home prices are still the highest they've ever been. So the reasons that he cited for this change in policy involves the fact that inflation, they have finally reached a point where they feel that they need to cut rates, even though the inflation numbers don't necessarily reflect the true picture. There's a lot of factors that are not included in the inflation CPI. So the other reason that they cited was the easing of the labor market, and there's been a lot of layoffs and unemployment rate is increasing. So how is that going to impact the real estate is the next question, and the economy in general. We saw that the stock market reacted really well yesterday to that announcement. And the fact is, according to this chart I'm going to show you here from Case-Shiller, the stock market there has never been in the history of the capital markets an announcement of quantitative easing while the stock market has been so high and is at the highest level it's ever been. So what is that going to do to the stock market? Well, it's probably going to, since there's going to be more money supply, there's probably going to be another bubble that's going to be created, and which means that there is going to be a burst at some point, and the recession is inevitable at some point, probably soon, and in the future, very soon. As far as the real estate market, the home prices are at the highest they've ever been, and there has never been an announcement of this kind when the prices are at this level. So that's probably going to create a similar effect on the real estate market as far as single-family residence and home prices in general, residential properties. Meanwhile, also the rents, of course, are at the highest level they've ever been, according to Zillow data that was provided, and I'm putting up the charts here. So we see that the food prices are still through the roof. And we also see, for instance, homeowners insurance is at the highest level it's ever been. And so how are these going to come into play? So with expansion of the money supply, we are going to see a devaluation of the dollar even further, which is going to translate in increase in inflation at some point again, and real inflation rather, and it's going to get worse as far as affordability, not just for housing, but for everything else, from goods to anything that we need for our everyday lives. So I hope this video provides you some information, and so you can prepare and just keep an eye on how this is going to affect you and make the right decisions as you move forward. Feel free to subscribe to my channel, and please share it with your friends. Thank you so much. Bye.